If you work in the US and have a 401k, chances are most of your investment will be in the mutual funds. Mutual funds are pooled investment options managed by professional investment management firms like the Vanguard and the Fidelity. Although most of you have only noticed the total value of the investment, the underlying value is derived from net asset value or NAV of the fund. In today's video, we'll walk through the important participants in this industry and how they work together to produce this NAV. If you are new here, please like and subscribe, and I will provide all the links mentioned in this video in the description box below. Stay until the end of the video where you'll find tools for finding the NAV and beyond. First, let's look at the mutual funds market overview. In the US alone, there are about 9,000 plus funds, and with a total asset under management of $17.7 trillion as of this recording. Globally, the size is about 50 trillion, and in US alone, there are about 128,000 employees in this industry. So let's define what NAV is. NAV stands for net asset value, and it's typically represented as NAV per share. So to calculate this number, you would need to know the number of shares that is outstanding for a fund. Consider, for example, there are securities worth 50 million in a fund and uninvested cash of $5 million. The number of shares outstanding be 1 million. The net asset value of the fund is $55 million, and the NAV per share, which is what is quoted, is $55. Let's assume that you and 4 of your friends pool an equal amount of cash to raise $100,000 to start a mutual fund. Each of you are equally vested and will own 200 shares, assuming that there is a total outstanding share of 1,000. Now the investment advisor you hired has decided to invest this $100,000 into 2 stocks, IBM and Tesla, with equal weights. IBM is trading at 500 and Tesla at 1,000. Then the initial portfolio will have a mix as shown. The next day, assume that the stock value goes up. The total value of the investment reaches $112,000. The fund also incurs an expense of $2,000, which needs to be paid for setting up the fund. This will make the new NAV of the fund to be $110,000 and the new NAV per share to be 110. After a month of operation, the stock value still is riding high and the total value of the investment reaches $124,000. The fund incurs an expense of $4,000. This will make the new NAV to be $120,000 and the new NAV per share to be $120. Imagine at this point in time 2 additional investors want to invest in this fund. They'll have to subscribe to the fund at the new NAV of $120 per share. Unlike the stock which you buy from the exchange, the mutual funds is always bought and sold through the broker. Most likely, we'll have to record this new subscription with a transfer agent. Assume they are buying 100 shares each. The NAV of the fund will be $144,000 and the NAV per share still will be 120, and the increase in the total outstanding shares will be 1,200. Thus the new subscription won't affect the NAV per share, but the value of the underlying stock or investment will affect the NAV per share. The expenses will always reduce the NAV per share. In the year 2018 alone, the net money outflow from mutual funds to ETFs was 180 billion for this very same reason, where mutual funds are considered to be actively managed and therefore more expensive than the ETF, which are index funds. We'll cover the ETFs in the upcoming video. Next, let's look at the key industry participants. First is a custodian bank. As the name stands, a custodian bank is a bank. The custodian bank opens 2 fundamental accounts. One is the cash account, into which the $100,000 raised goes in. The second is a securities account, into which the securities the investment advisor purchases goes in. Custodian is also responsible for servicing the securities. It simply means to collect any dividends or interest on the security purchased. Custodian also pays out the expenses the fund will incur. Let's look at a sample contract between the custodian and a mutual fund. This is a sample contract between the mutual fund and a custodian. The custodian's primary responsibility is to receive and hold assets, and also to do disbursement of cash and delivery of securities. The various sub-services that the custodian performs as enumerated here. Next function is performed by the fund accountant. The fund accountant's main job is to maintain portfolio records on a trade date plus one basis, and he also does valuation of these securities. The fund accountant accounts for any cash transactions and reconciles that with the custodian and the transfer agent. Reconciliation is a huge area in the securities operations. Fund accountant also accounts for share purchases and sales by the transfer agent. This is a typical contract between the mutual fund and set of the fund accounting service provider. The fund accounting service provider maintains portfolio records on trade date plus one and does valuation on the prices obtained from sources like Bloomberg or Reuters. He does reconciliation of the cash and the portfolio holdings with that of the fund's custodian and capital stock activity with that of the fund's transfer agent. But the most critical function the fund accountant performs is to daily value the net asset of the securities and distribute the NAV to entities like NASDAQ. This is a typical fund accounting fee schedule. As you can see, this is an annual basis point fee where basis point is 1/100th of a percentage, so which means 100 basis point is equal to 1%. There is a wide range of fees for every single net asset bracket. For example, there is a 0.02% for 100 million to 250 million bracket for the net assets. The next function is performed by the transfer agent. Any security that is traded in the market will need a register who maintains the shareholder information at that given point in time and answers the basic question, who owns the security at that point in time. In our case, who owns the mutual fund. The transfer agent will maintain key information of the shareholder, including address, tax ID, which will be needed for communication. So at any given point in time, you receive performance information of the mutual fund. It's typically sent by the transfer agent. Let's look at the key contract between the transfer agent and mutual fund, and therefore the services of a transfer agent. This is a typical contract between the mutual fund and that of the transfer agency. As you can see, there are numerous functions, but the most critical of them is to have a record keeping system that supports any kind of redemption and subscription activity in the fund. He also maintains the shareholder records, which includes address and other taxpayer identification numbers and wire instructions. Next, we'll see where to find the NAV information. First up is Google. If you know the fund's name or the ticker, you could come into Google and search for MUTF, which stands for mutual funds, and search in the mutual funds ticker name. In this case, you have a little more information related to not just the NAV, but also some comparison tools with indexes like Dow Jones and S&P, for example. You could also find the same information related to the fund in Yahoo, and you could also see the same information in websites like FINRA. FINRA's Fund Analyzer is a much more comprehensive tool which is authoritative and unbiased for investors like you and me. The reason why I say this is unbiased is because they don't have any incentive to promote a fund or to de-promote a fund. In the future videos, we will come across sections of this fund analyzer and how this can be useful for comparison across multiple funds, including the fee structure. As we have seen, there are numerous participants in this industry who work together to produce a single number NAV. Hope you found this video useful. Thanks for watching.